Alright, let's start a trade review. We'll start working backwards. We'll start with today's trade, Tuesday, May 26th. Good risk management right here. Good exit after that break of the high. This was on Friday, so I always like to start with hard time frame on Friday. Looked pretty bullish. Quite a huge wick. A bull candle nonetheless on the 4 hour. Hourly, same situation. Very large body candle close on the hourly. Seems like we could be turning over, but until said otherwise, we will just listen to what the charts are saying. Another short on pre-market high sweep attempt. The thing is, remember, the more often a level is tested, the less respect it will have when revisited. So the fact that pre-market high was 665, it was good that you were keeping an eye out for that, but we immediately swept that at open. As you can see, we dipped into sell side liquidity and then straight shot up manipulation past pre-market high. And then right back down to our sell side liquidity at 500-ish. What we would want to be playing off now as a sweep past 7 this high now, because the fact that we swept pre-market high at open means it no longer has the same respect and there's no longer as many resting orders as there was initially. So kind of like a reoccurring theme I want to see is further confirmation after the sweep of that level, and then using some PD array like an IFVG or an OB as your entry. There's our break past that high. I'd like to see you using this equal high right here as your confirmation, and then just targeting the midway point of the discount of this range, which would look something like this. And remember, we average about 30 points according to our back tests on our stop, so that trade would look something like this. So the idea is there. Just remember, it's important to know that once the level has been swept already, there's no longer resting orders there. So that pre-market high sweep short play would have had to have happened right at open. And then since it didn't, we'd be looking at the high it created on the day. Now looking at this short, very solid short. We'll start higher time frame as always. Pretty bearish. Check the hourly. We tapped into this bearish FVG. Important to keep in mind on the higher time frame, we're pretty much just at the midpoint between this discount and premium on the hourly. This would probably be closer to a no trade zone for me, except the short wick after the consequent encroachment on the FEG. This looks pretty solid. Yeah, perfect sweep. Targeted break of those lows, or pre-market low ideally, but based on this chop, good trade, just a lot of chop. Seems like you went for it again here. Yeah, so another thing, again, I want to keep emphasizing this, that fair value gap was already mitigated originally when we swept that CE, so it won't have the same level of respect when we revisit that price range. As you can see here, it was almost completely disrespected. What hasn't been disrespected yet, or reached yet, is pre-market high. So if we are looking for another short entry, I'd be waiting for pre-market high as a sweep. But honestly, given the amount of bullish momentum up towards pre-market high, I'd be much less inclined to short in this scenario. Check out this trade now. It was taken on Monday the 18th. Alright, so this is right before London open. It's just hard to short here, given that pre-market high is 200 points away. And London manipulates into these levels, generally speaking. I just don't recommend too much in general entering right into London open. I'd wait to see how price manipulates here first. London could very well sweep this high right here at 80. Yeah, there's our high. This trade simply, I just would enter the trade right before London open. So usually there's manipulation to both sides. Now this trade, taken on Monday. Again, start on the higher time frame. It looks a little neutral bearish. 1 hour, it looks like we could be trading into a range of discount, but definitely a strong bear candle on the hourly. Almost all of that momentum's a body candle close, and we already mitigated this FEG. 15-minute, we're tapping into a bullish FEG. We're almost exactly in between pre-market highs and lows, trading just right at the midpoint. This is our range of consolidation right here. Typically, if we have a bearish trending market, you can expect price to coil up in this range and then manipulation to the upside real quick and continuation to the downside towards a draw on liquidity, in this case pre-market low. This trade would kind of be a no-go for me just because we're at the midpoint in between our session extremes. We'll see how it played out though. Alright. So there was our chop. Tapped into some sell side liquidity here. Yeah, simply put, price was bearish today. So until otherwise, I would be looking for shorts in this case. So thing I would keep an eye out for, honestly, is just getting some confirmation on those session sweeps. And of course, not trading right before London Open. Unless your strategy shows there's alpha during those hours.